All right. Well, we closed just below GN on the monthly. 5808 held support at 5800, which is a major support. So no slip below delta neutral yet. Although delta neutral may have moved up slightly today, so it's possible that we tested it earlier, but have not failed it. We rejected on the breakout from the upside of the downtrend. I think this looks very like a very good setup off of the lower high for a continuation into the beginning of next week. And this is the weakness on the back half of the week that we have been waiting for oh so long. So possible we move into the end of the month just a little bit negative, which is next Thursday. ES failed the bear flag after a fake breakout, but still held the downtrend from the support into the end of the day. See where that closes, but probably right around here, like 58.40, 58.40 to 58.50. Commodities up slightly. Looks like mostly on the back of the push up in oil, but agricultural commodities once again outperforming. Dixie and yields a little bit lower on the day, I believe. No, Dixie moved up on the day. Sorry. Did any of the yields? No. All of the yields rebounded across the board. Initially, it was just the front end of the curve, but it looks like the back end of the curve caught up too. The 10-year now at 4.24, alongside those slightly better durables orders is going to be fear of higher inflation, especially sticky core inflation. Breakdown and correlation pretty much throughout the entirety of the day. We did recover briefly, and then that failed again. This looks like it's starting to turn around, slightly higher highs here. 1 month correlations coming more in line with 3-month core. And vol shorts are falling back across the chain, and they have been all week. Leverage and the carry was down earlier today, but kind of gained a little bit of ground into close. However, alongside that, the forward yield to volatility ended the week up 2.37%. The 3 and 6 month end of the carry not really doing too much. Correlation up, bond vol probably not up a lot, but that's starting to catch up with bond volatility. And the spread between those can collapse really fast. Skew down again. That could be indicative of more tail risk hedging coming into the chain. And we might start to see some more bearish positioning in the delta for the end of the month. 47.31% of the S&P above its 20-day moving average, and correlation with VIX on the weekly slightly up from last week, but on the daily still kind of declining. As this declines, we tend to get stronger moves in volatility, and we'll start to see especially because correlation is still just so high, probably start to see some of that short vol get squeezed out that came in. Fed fund futures, I don't know, I guess around 10 o'clock today with Michigan consumer expectations fell about 6 points, which, not, well, 0.06, which is starting to trim back some of the rate cut expectations into June. Now almost, not quite, but almost back to 3 cuts by halfway into next year. I think if we don't see a Fed cut at this meeting, it's a possibility that we start to trim below that. And inflation fears start to reignite a bit. 210 spread dropped quite a bit earlier this morning, kind of came back a little after the durables print, and then fell off again following Michigan. Still positive 13.8. I mean, not really inverting, and also not uninverting. 2-year 10-year spread is at about, oh yeah, that is the 2-year 10-year spread, so that's a 13.8. But it is getting a little bit tighter. Not as bad as we were, beginning of October, but if there is no Fed cut at the next FOMC meeting, which is the week after next, I believe, we will probably start to see the yield curve re-invert, at which point, that inflation could start to get a little bullish as the dollar skyrockets again. although the dollar's up quite a lot already. Banking getting hit, which is kind of what I was hoping for into the back half of this week, with yields continuing to rise and M2 supply not showing a significant amount of lending. I think that sets us up pretty well for labor data to be stronger, and credit conditions to tighten, which means that all of the expectations that were priced in for their forward interest earnings will trim back, and all of them gained like 10% last month and then this month. So I think there's a chance for at least profit taking, but possibly a bigger pullback in the finance sector. However, generally alongside that, that means a lot of money is probably going to go into tech. And we saw some of that today, although it was kind of muted. NQ still outperformed despite the pullback. And NQ may continue as rates go up to outperform the S&P. So if you want more vol and possibly better tradable signals, that may be the place to go, especially if vol starts to crush out and we don't get a correction. I think that's about it. Oils, we should probably talk about oil. I know a bunch of you guys are trading it. Oil's held 70 a barrel today. We got a bounce late last night off of 70. I've just been buying long at literally every test of 70 for the last like 2 weeks. It's working out. The yeah, it's been a pretty solid buy signal. All the way back since like the 15th. Starting to get a bit more range to the upside. If it holds the long-term trend, that opens up an opportunity for it to move higher towards, 73, 74 a barrel. But probably that alongside with conflict escalation in the Middle East. And you got to really pay attention to the news cycle there because every wish wash on a ceasefire or troop pullback sees oil drop, and then every renewed interest in escalating the conflict sees oil rise, and so it's got a lot of volatility right now, but decent money so far to be made on the bounces above $70 a barrel, at least from what I've traded. And I think that's about it. Yeah, I'll see you guys on Sunday for the member stream. Ready for Black Monday? Maybe. I 10x my account today, all of my own trades. Nice. Well done. Yeah, so I'll see you guys Sunday for the member stream. Everybody have a great weekend. Later.